Hello, everyone. Welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just remember the disclaimer. Nothing should be construed as financial investment advice, just my opinions, my thoughts on the market. Read more on the disclaimer below. Yeah, my computer, it's weird. I didn't even try to fix it, but like 2 weeks ago, just started having problems and they just went away. I don't know. Maybe it was hacked and then maybe it just they realized there was nothing really on the computer worthwhile, so they nothing happened. Or maybe there's a second version of me now with all the info. Who knows? But anyway, just wanted to get into another video, have more time, talk about a bunch of other stuff. But I will so let's get into some of the stuff today. Just regular news. U.S. home foreclosures. I didn't know this, but foreclosures have surged 21% year over year so far. And they say top states: Delaware, South Carolina, Nevada, New Jersey, and Florida. A lot of it's due to high costs, property taxes, and insurance. And this is why I always say, like, an unexpected repair or whatnot, they act like when they talk about, yeah, the housing market can't crash because they're all locked in at low rates and they're not going to leave. They act like their interest rates are their only cost. There's a lot more cost going into these. So I do think a housing crash is a little bit further away, meaning like maybe 6 months at the minimum, but it could be longer because I think the auto loans, the credit card bubble, among others. There's also another one. I'll show you this. Look at this. Credit card delinquencies, those have remained elevated. So a lot of commercial banks and Gen Z holding the highest delinquency rates. Delinquency rates are higher than 2019 levels. So, and I mean, Gen Z makes the least money. I'm not saying that as an insult. They're the youngest. That's what happens. Just that's what happens. So that's what it's always the weakest leg to fall first. So that is one thing. These delinquencies. This is why I think there will be a market crash soon. I don't know exactly, but I think it will come soon. And I think the emerging markets, gold, silver, will be great buys there. Bullion and stocks. I'll probably be buying mostly royalty and streamers. I'm getting older, so I probably won't dabble in the juniors as much when that comes. Sure. So I'll go where I think the markets are going. I could be wrong, but let's get into one thing I forgot yesterday. As I talked about the dismal job reports number, I actually had a comment on that on Substack about revisions. You can go to my Substack below and read that. But here it is. Retail sales were negative 2% in the previous month. So, retail sales. And to show how much they cook the books, I'll just see it. They contracted for motor vehicle and parts dealers, gasoline stations, which I think those sales are probably going to go up this month, electronics and appliance stores, and clothing and accessories. But sales for furniture, building materials, garden equipment, Miscellaneous and non-retails were 1.9. And then look at this. These were enough to lift the control group of retail sales, whatever that is, and have a positive impact on US GDP from the previous year. So even when it's negative, it's a positive. To show how cooked the books are, if you look in the details, even when it's negative, they're going to try to maintain a positive. So, but yeah, retail sales are declining. This is not good, and to show this is, I found this interesting. How much I think inflation might come if oil holds $77, which I think it will. The CPI will jump 3%. That's if it holds 77. They're not talking about if it holds 90, 80. Oil prices are resumed to rise, topping 95, based on blockchain and contract difference trading. They say a sustained 10%. And remember, this is just a CPI by 28. Imagine the real rate of inflation. So expect more, higher prices, and everything. And then I'm going to do this last because I just wanted to talk about certain markets first, and certain markets and cash. So let me. But I was going to say, this is one thing I want to do with philosophy. This is why I don't really trade and don't feel the need to do a lot of technical. Now, this is a service I used to subscribe to, but I'm not going to say too much. But here's something January 3rd. Here's this oil's going lower. Well, talk about a dead wrong, but this is the thing. When you trade, you try to go down and low. Even the best traders get it wrong a lot. I would say in this service, they're wrong very frequently, much more than they let on. But investing wise, if you buy the best of the best, like look at Franco Nevada, which I used to own. I'm buying a house, so I still have some mining positions, but when this sort of crash gets in, I don't want to sound hypocritical. I'm probably going to look to get back in to it, but I have to see how much money I have, how much I have. I'll probably be out of the miners soon enough, and then waiting because there's a lot of deflation as we go over on this channel. And I have to buy a home. I don't know what my savings will be, and so I will probably be. I love wheat and precious metals, Franco. I used to own them, but what was it? Royal Gold. There's a lot of others, but anyway, you look at Franco Nevada, 2011. If you can't see it, it's around $30 to $26 per share. Let's go to 2011. Let's just go to the top to be all fairness. It peaked in August, so it's around 40 bucks, 37. No, June 37.30. It's at 259 now, but even if you sold it in 2016, that's 72 bucks, despite the gold decline. You buy great businesses, your returns are much higher than trading. This is a double your money plus the dividends paid. They pay dividends. Most of you don't know how long ago I bought Franco Nevada. It was gold wheaten when I had it, and then they bought out, and I ended up taking those shares and just buying Franco with them. I'm like, well, I like that asset. If Franco has it, I like it, and it's been a big winner for me. I'm buying a house all cash. Like that's how big of a winner it is. I mean, that's not the only one. There's Wheaton. I bought that during the financial crisis, but anyway. And I mean, there are opportunities. If you look at this stock at one point, it was up here, up here, up here, and then boom. In 2024, it went to 109. My wife had money to invest, and I was tempted to tell her. And I just, at that time, I just was not, I was worried about everything. I mean, this was before the bull market. My confidence was lacking a little. I've experienced a lot of losses basically since 2012. And I was like, but I knew it was a great buy then. And that's why I say patience is a virtue because, like, right there, 107 in 2021, 120 in 2022. There always will be, if you wait, even the best of the best, there's going to be opportunities in cash. So I'm not worried. So always remember, cash is never a bad thing. I'm going to go in why uh, everyone should have a cash position right now. I don't know exactly because I have to pay for my house and do everything. I have so much money just flying in cash, but some that will be devoted towards getting a house in Poland and eventually moving over there. So I was hoping to move earlier, but it'll probably be pushed back till next year, unfortunately. So I'll have another move. Gosh, that's not going to be fun. Anyway, but yeah, you buy Franco, even WPM. You look at this. Let's just do the max. You buy this. Look at this, 2000. Just do the top at 44. That was the top. Now it did go down for a long time, but then so this would have lost money, but if you sold not too much, but you get dividends, but then it just went vertical. Just vertical. They had a lot of problems at the time. Like they had the tax situation. They had a lot of debt, so that may not be. But if you look at Royal Gold, you buy that at the top. It's $84. Now this really went down to 35, but you sold it at the end of the decade or 2019. That's 117. So you still made a good money buying the best of the best. Franco's the most extreme example, but still, you invest well, you buy good companies during bear markets, and then eventually you start selling. Now, gosh, $279. That is wow. That's a lot. Wow. Look at that. So, gosh, on that type of chart, let me see 5 year. But I do think there'll be opportunities again to buy these stocks at cheap. But like, yeah, even if you look at Royal Gold, let's just look at the max. Like, there's here 22,000, but even during the bull market, comes down 73. Then right here during the crash goes to 90, 71. And then here it goes to 93. So yeah, there are always opportunities. Things always go down. And this is one reason I always say you should have cash on the side because there'll always be opportunities. There always will be opportunities to buy, especially in the resource sector. In the resource sector, now this one I actually do own, so disclaimer. But even if you do Suncor, if you look at that, 2008 high is around 56, but then 22 around 2008, and then at the 2022 again in 2020, 20 in 2020. So, and then even in 2023, there was $38, and now it's at 77. So over the course of a period where it's big oil or whatnot, there's always going to be opportunities. This is incredible. This is what I like about this industry. It's very cyclical. And you don't have to feel guilty because a lot of these come back down, trimming and taking profits. And just have your cash on the side and you can just follow a couple of industries. You don't have to invest in the whole commodity complex. and just wait for opportunities. Have cash. You buy here, and then it goes up. You can trim a little, goes back down. So that's what I think. If you actually look at this, I mean, if you look at this chart, it broke a trend line. I think oil. One of the reasons, if you look at the Suncor, that was actually down despite the 9% spike. On a 5-day basis, it's down. On a month basis, it's up 4%. 6 months is up 38%. I still think oil stocks have some room to run, even if the price just flatlines, because a lot of people are pricing a quick end to this war, especially Canadian, because Canadians still, they're actually building their infrastructure. They have a pipeline in British Columbia, and they have a pipeline just basically east and west. They're trying to get gas to Europe, and they're trying to get oil to Asia. And I think Canada will be a big benefactor. So anyway, just not investment advice, but in terms of the stock market, if you look at it, it's really not doing that well. And I mean, there could be a bounce, but I think it's beginning a downside trend. And I think, in my opinion, I think below 3,500 is when I'll start buying the best of the best. Personally, I'm not going to say it exactly. I mean, Coca-Cola came to mind, but just stuff you need. And I think emerging markets will be a great buy. I have to figure out how much I'm going to have. I'll have a good amount, but like how I'm going to divvy it up and whatnot. And yeah, I think, and I'll always do good dividends. I did the Babe Ruth, listen to yesterday's dividend portfolio. And the reason I do dividends is eventually you might have to live on this. Or if you go a while without income, at least you can live off the income from this. And not only that, let's say you buy and just keep buying, and then you don't have much of a cash position, but you have a lot of stocks with dividends. That dividend can help replenish your cash position. So, yeah, stock market, I would say 3,500 or 4K in my opinion. And I think the stocks are gonna. I mean, this could take years. It could be 5 years from now, 6 years from now. There's always opportunity somewhere. I mainly follow the energy. What was the other? I mainly follow energy, gold, U.S. stocks, and then emerging markets. I want to learn because I think those will be a big winner over the next 20 years. As the world sort of de-dollarizes, I think they'll do well. But I have to figure out what's going to be available to me. So when I move, I'll have an international account. So I'm keeping my U.S. accounts, brokerage accounts, just in case. Just in case I can, I want to buy U.S. stocks. I'll actually have one brokerage account solely for U.S. Stocks. So anyway, that's my thing with the U.S. stock market. And the S&P, that's what I'm doing, not investment advice. Just when it gets down to 3,500, I'll be looking for good. In terms of gold and silver, go to gold. I personally think, not investment advice. Let's see if we can actually get this chart going. Do an all. If you actually look at this, this is a huge spike. I don't care what let's look at the 5-year. It's still a good, it's not like, I don't think it's a, you look at this, just kept going up, spiked up. And it looks like it could go up again, like sort of a triangle and go up. I think it probably will go up one more year, maybe a half a year. I've sold a good amount. I've taken profits, but I'm looking, if it goes up to 5,600, And now I'm just telling you what I'm doing. I'm not investment advice. I still have a good amount of miners. I might take some profits on some miners, or goes up to 6,000. I might just have a bunch of stop losses. And I also want to do for silver. Let's see, for silver. I'm not sure exactly when. I think it could go over 100 again and then form sort of a double top or go up even more and finally make one more final final high. Yeah, I'm just trying to I'm gonna get back to the silver chart again. Uh but this is why I'm not like that confident and I took a lot of money. Just look at the silver chart right here. Anytime you see a spike like that, screams profit taking. I don't care what it is. You don't need to be a tech analyst to. And if you look at this, even on the 5 year, that was just a huge spike. So we'll see what happens. I mean, my profit taking, even though I have some silver stocks, are more on gold than silver. And if you look at it on the 1 year, it's still sort of, even though this is down, could converge and go up more. Year to date, same thing, like lower. Look at this, low, higher low. So it could be converging. I don't know. I'm not even on the 6 months. That's a lower, but lower low, higher, higher high from this one here, February 4th. So, I mean, I think it has one more upswing. It's my own version of technical analysis. I'm not technical, but I look at charts and just look at them in a 1 year. Like when this started going up and was breaking, I knew it was sort of, even though I took profits like all the way up towards 100, I sort of knew it was going to 100. But yeah, that's what I'm looking for. I think, but if you look at silver, it's hard to look because there's so many. But in 2008, it got to $9 silver. I remember that. And then 2015, it got to 14. 2019, it got to 11. And I personally think what will happen is after this next top forms, or if it's not already a top, if you look at it, look at this spike from here. It comes all the way bottoms out to here. And even look at the spike here, came and bottomed out here. So in 2010, this is $20 is where it came, where the spike began. It sort of erased all that and then build up support. So what I think will happen is 50, though, if you look at it here, is a lot of technical analysts say this is very long-term support. I think once silver breaks 60, that will be a good, in my opinion, opportunity to buy. And if it goes down to 50, I think it will be a final flush. And that's when you should buy hand over. In my opinion, that's when I'm going to buy hand over fist, where it's bullion, or I have enough physicals. When it's, if or when it goes down around 60, that's when I will probably be going into the royalty and streaming sector, where it's Franco or Wheaton Precious Metals, Royal Gold, Triple Flag that's still around, or Cisco Gold royalties. And then if it goes below 50, I will be buying a lot more physical. I'll probably be buying more since I'm moving to Poland and there's no tax on bullion there. Probably buying bullion, but that's just my opinion. That's my sort of long-term targets. But silver could be going up, or it could go up to 150. and then back down. But I do think a lot of this, if you look at this parabolic spike, I think a lot of this will be retraced back because it's just forced selling, force majeure. So going back, and this is why I always say, keep cash on the sideline because there's always going to be opportunities, and you just never know how much. Like, let's see. I want to go back to Coca-Cola. Even the bull market, if you look at this 2020, if you just are interested in normal stocks, Coca-Cola was around 40. It went up to 77. Plus, you got a lot of good dividends. If you look at, I did Franco Nevada. If you look at wheat and precious metals, around 215, then it went up to 26. But if you just kept buying all throughout 2020 at $25, goes up to 146, and you are really sitting pretty. Maybe you could retire. Clorox is generally a good stock, but let me see. Clorox might be a buy now. At one point, it was like 197. But yeah, I haven't followed that much. But let's see. Microsoft. I know that's gone up a lot. Even then, Microsoft, look at this. It was flatline. You could have been buying, or any of us. I actually, in 2013, wanted to buy, but I was so addicted to gold and silver, I didn't buy. I would sort of look at this 24, 26, 33. But even then, 2020, then it went to 170. And then from 170, it went down to 137 again. That was an opportunity. Then it went down to 244. That was an opportunity. So even in upswings, there's always going to be opportunities to buy. Where it's stocks, where it's precious metals. Let's go to McDonald's. This was one. I do have a list somewhere of like consumer stocks, but you just look at it. $15. Wow. 2002, 2010, 60, 57, 100. But even then, 2020, it spiked down to 177. It's at 328 plus all the dividends. So there's always opportunities no matter what sector you go to. And that's why I think there'll be cash is a good opportunity. And sometimes there's opportunities galore, which I think is going to happen in the next couple of years because I'm just going to use the S&P 500. You look at from 2006, it was at 1500, and then it went down to 868 in 2009, despite inflation going up, cost of living going up. Remember, there was a housing bubble. If you held cash, you could buy the S&P. Let's just do the GLD. I'm just doing this for gold. You look at gold. I'm just going to do 2008. Even though it was going up, what happened in 2008? GLD, this is not right. All right. Anyway, I know what happened. So off the top of my head, gold went from $1,000 to 700. I'm just going to get gold. So while you could have bought the S&P, you can also buy gold. See if we can get back to that. 2006. So 2006, wait, no, that's 2011. it was around 670. So if you bought physical, but 1,000, then it went back down to 700, 680. October 1st, it was at December '08 first, it was at 700. And I still remember that because I remember one gold bullion dealer said when it was at 800, he literally put out an alert. This was one of the best calls I've ever been around. Said literally the only thing it said was, this is your last opportunity to buy gold in the triple digits. Buy it now because you're never going to have this opportunity again. And literally 3 years later, it went to 1921, the top. And the bottom was around, it didn't get in the triple digits. It was around it was like 1,109. It didn't get into the triple digits. So that was one of the best calls. It said gold right now is around 800. It's whatever as I'm writing this. Buy it now because you're never going to get to buy it at this low of a price again. And so the S&P tanked, gold tanked, and I think something like this is going to come out in the near future. Not investment advice, just my opinion. And then if you look at silver, the infamous in 2008, whoa, it was at $9 silver, 960. So you can buy gold, you can buy silver, you can buy oil stocks. Was oil went down 30, and that's why I'm saying there are there are opportunities like that come in the market. '08 was probably 2020, and it was probably very similar. But the thing is, not all of them just rose quickly after 2011. So anyway, remember, nothing should be construed as financial investment advice. This is just my opinion, thoughts on the market. And remember, do your own research, consult a financial advisor. I'll see you next video.